Welcome to lesson 1.1. This is all about your paycheck. By the end of this video, you should understand how your gross pay and net pay are calculated. You should know the amount and purpose of the deductions from your paycheck. You might ask yourself, when am I ever going to use this? Well, when would you not need to use it? Every paycheck you're going to earn counts. You want to know where your money's going because money that's managed wisely is the same as earning money. If you save a dollar due to your good financial management, it's the same as a new dollar earned. So don't just work for money, that's good, but also manage it well. A lot of people don't. You know what percent of all Americans work paycheck to paycheck? That means by the time the next paycheck shows up, they're all out of money and they desperately need that paycheck. There's no savings, there's no cushion. They really need that next paycheck just to pay the bills. That's a big number. We don't want that to happen to you. We don't want you to be broke, so we want everybody to be educated about your own money. The answer to the question is, well, about 76%. That's 3 out of 4 Americans living paycheck to paycheck. We don't want you to do that. So we're going to look at paychecks here, and hopefully you'll use it every 2 weeks of your working life because every dollar counts, right? Dollar saved is the same as a dollar earned. Here's a sample paycheck from a made-up character named John Doe. He lives in Milwaukee, Wisconsin, and his gross pay is calculated by his total hours worked times his hourly rate. He makes $9 an hour, so 50 times 9 is 450. There's his gross pay. Now, this can normally include overtime, commissions, or bonuses if you had a job that paid you commissions or bonuses. And don't forget benefits. Benefits like health benefits or retirement fund, those are very, very valuable, but they're just not included in gross pay. So your total compensation package won't just show up on a paycheck. Hopefully, you have some other benefits as well. Now, this young man here, he's worked 2 pay periods, it looks like, because he made $450 this period in gross pay. His year to date, that's what the YTD stands for, is $900, so he's worked 1 other pay period before then. So this is his gross pay, YTD is his year to date total gross pay. Here's his deductions. Notice he didn't have anything taken out from federal income tax or Wisconsin state income tax. That's unusual. Maybe he claimed a lot of allowances. We'll talk about that in a minute here, but he didn't take anything out. That could be a mistake because he might owe taxes at the end of the year. His total deductions are these two, $25.92 and $6.08. This is FICA Medicare. This is a federal health care plan that you should be able to tap into after a certain age. Right now, that age is in the mid-60s. Okay, that may change by the time you get to that age. FICA Social Security is a federally run retirement plan. Hopefully, it'll still be there for you when you get to your 60s, and you can tap into that if you've paid into it. Okay, so these deductions add up to $32. If you take the 450 minus 32, you get his net pay of 418. So his net pay is simply gross pay minus all the deductions added up, and you get his net pay, also known as take-home pay. Here's a sample from an actual student in Roseville Joint Union High School District right now. He's working at a restaurant, and he worked 34.11 hours. He made $8 an hour, so this times this gives him $272.88. Pretty simple. The feds, or the federal government, national government, withheld, that's what that stands for, $18.63. This is his deduction for Social Security and for Medicare. There's a local tax here of $2.73. I don't know where that is. That's probably not in Roseville. I don't think we have one, so he must work out of town. But all these numbers subtracted from 273 roughly, I'm rounding off, give him $230.64. That's his take-home pay or his net pay. And there you go. It's that simple. Notice again, the pay period is about 2 weeks, right? Late December to early January of 2014. Here's another one. This kid works at Taco Bell, making $8 an hour. 16 hours, 16.1 hours times $8 an hour gives him $128.80. Here's his gross pay right here. The feds took out $4.23. Medicare is $1.87. Social Security is here. This last one is California State Disability Insurance for $1.29. That's if you get injured on the job. Sometimes if you qualify, you can get a paycheck still if you can't work due to a work-related injury. So you have to pay into that in order to qualify for it. But at 128 minus these 4 numbers gives him his net pay of $113.42. Real simple, okay? So what are these deductions? FICA, Social Security, and Medicare are already determined. Your Social Security is about 6.2% of your gross pay. And if you make a lot of money, say over 110 grand or so, it's capped and you don't pay it past that amount. They still have to pay it up to that amount, but don't worry about that. That doesn't affect too many young adults or teenagers. Medicare is about 1.5% of your gross pay, and there's no caps on that. You pay it for every dollar you earn. Okay. Federal and state taxes, you do get to decide, but you've got to make sure you take out the right amount so you don't owe money at the end of the year. The way that you decide how much is taken out is because of this W-4 form. When you start a job, they'll ask you to fill this out. And so what happens here is you do a little worksheet here. Notice they have a worksheet for you to fill out, and you get a number of allowances that you'll claim on your W-4 form. The more allowances, the less money they take out of your check. The fewer allowances, the more money they take out. So that's how it works. All right. So what you want to be careful of, though, is you might think, well, why don't I just make a lot of allowances? Can I claim enough exemptions to these to where no tax deductions are taken out? And the answer is, yeah, you could, but if you take out too little, you'll owe the government at the end of the year. If you can't pay your taxes at the end of the year, there's fines, there's penalties, and some people even go to jail for tax evasion. You got to pay your taxes. So I would not recommend having no money taken out unless you are certain you're not going to owe federal and state taxes at the end of the year. If you're not sure how this works, get it right. Talk to your parents about your W-4 form, or talk to your employer's HR department. That stands for Human Resources, and they should help you with that. Their personnel department should be able to help you with this W-4. If this worksheet doesn't make sense to you, get help. Get it right. So here's one more paycheck we're going to look at. We're going to zoom in on this gal. She's from New York City, it looks like. Jane Harper down here from New York, Newtown, USA, either way. She's got New York City income tax here, and that's what told me she's from New York. So what hourly rate is she paid? Looks like 10 bucks an hour, 32 hours, 320. This times this gives me 320. Now she did have some overtime. Remember we talked about that? So 1 hour at time and a half, they call it. They call it time and a half. It's really pay and a half. So her $10 an hour rate is $15 an hour only for that overtime hour. It looks like she had a full day of vacation that they pay her for, even though she didn't work it. So there's 8 hours of vacation pay. So she gets that pay even though she didn't really work it. She only worked 32 hours of regular and 1 hour of overtime. So here's 8 hours at vacation pay at her normal rate, 80 bucks for that. And it looks like they reimbursed some tuition here. That star means it's not taxable. So that was money she paid, and they're just reimbursing her for some tuition. She's taking some classes or something that the employer is paying for. These add up to $452.43. That's her gross pay. Okay. And now here are her deductions. Federal income tax. Notice it's about 10%. She took out quite a bit. Okay, 10% of that number. Social Security tax, that should be the about 6% that we took out, so it's about 30 bucks from that amount. Okay, Medicare tax, there it is. There's her 1.5% roughly. Okay, and now New York State is a high tax state. They took out $17 from that. They had their own New York City income tax. That's rare, but New York City is a city that taxes locally, so they take out some tax. I don't think you'll see that in California too often. You might see it in San Francisco or some other places, but now here she's got SUI-SDI. This is New York State Unemployment Insurance. Okay, so if you lost your job, you can still collect some benefits, but you have to pay into it. That's what this is. Everybody who works in New York gets some money deducted. We have that in California too, so just be aware of that. State disability insurance, we talked about that. This is if you get injured, and you could have some payments coming to you if you got injured on the job if you qualify. Notice she's a member of a union, so here's another deduction they take. All right. Now those are what they call involuntary deductions. Now down here she's got some voluntary ones, right? She's got her 401k plan. She's got a stock plan where she's buying company stock. It looks like she buys some life insurance for cheap, and she has a loan of some sort here. The big one I want to talk about is the 401k plan. This is a retirement plan, and that little asterisk there means a lot. It's excluded from federal taxable wages. So what she's doing, she's setting aside about 30 bucks from her $450 in gross pay to go into a retirement plan, a 401k. These are often matched by the employer. If she puts in 30 bucks or so, the employer puts in 30 bucks. I'm rounding off here, 28.85. But that's free money. If the employer matches your retirement fund, it's free money. You've got to maximize that free money by setting money aside. The better thing is that it grows with time without taxes. If it's invested well, it'll make a lot of interest, and the interest is not taxable until you take it out when you're retired. So this is a great plan for people to take into account when they do their financial deductions. The other piece is that it's pulled out before taxes. It reduces the amount of money on which she is taxed. So that's a huge benefit. As you get older, the more you can take out, the better. The more you can take out when you're young is good too, but a lot of young people fail to do that. They fail to start deducting or saving for retirement early on. Okay, it'll grow, and it'll grow a lot quicker than you think, so take care of that. Pay attention to your money, know where it goes, right? Have a plan, decide how much money you need to spend, and don't waste your hard-earned money. We're going to talk about that in the next lesson. Okay, and pay yourself first. If you start saving money now, it will grow over time for your future retirement. So these are three key things. Watch your paycheck. It's your money. Hope you do it well.